You're listening to Hayes Radio Network, Cannabis Lifestyle Radio.
Okay. Hi, guys. This is CNT Law Media Hour on Hayes Radio with Cindy Tran and Daisy. And we are so excited for today's episode because we have a special guest named Michelle Quan coming on, and she is a certified tax prepper.
She's a certified public accountant.
There we go. CPA.
CPA. That's what the CPA stands for.
Yes.
Yes.
Awesome.
Yes. And so I'm so happy that Michelle is going to join us today. She's a good friend and a great business acquaintance of mine. She and I exchange clients all the time. Her clients who need legal advice and my clients who need a lot of tax help. And she's really actually really good because she has clients that are actually really large corporations as well as international clients. And she does, just for all of you listeners out there, she definitely does service the cannabis industry as well. So do pay attention to what she has to say today.
That is awesome. Thank you. Michelle, how did you get started in the tax preparation business or becoming a CPA? And was that always a dream or a goal of yours?
No, actually, that was a long story. Actually, I came here. I went directly to college at the time that I did not speak any English.
Okay.
So I didn't even know what major is when everybody asked me, what is your major? And then I asked them, what is your major?
Right.
So at the time, accounting and also computer programming are the two most popular majors. So I knew that I was not good in computers. So I just said, accountant.
Okay.
So that's how I get into it.
I love that. And I think that's especially true for a lot of listeners. I know for myself, when I started college, I had an inkling of what I wanted to do, but I didn't know exactly what it was. And then I was like, everyone around me knows what they want to do for the rest of their lives, and I don't, So that's really, thank you for sharing that with us.
So not true. I changed my major 6 times.
Oh my gosh.
Some of us took a little longer to figure it out.
Right.
But Michelle, you know what I did?
Now you have a fun one.
Right, I know. Well, you know what I did? I did the computer route.
Yeah.
I did computer information systems.
And it didn't pan out? You didn't like it? Or?
No, it wasn't that bad because then I wanted to go into law and really do, intellectual property. And at one point I thought I was really going to major, do cyber law. And I was like, you know what? Okay.
No.
Business law seems to be so much more fun.
I think I found what I want. This is my niche. Okay, let's go there.
So I really want Michelle to let us know a little bit about what her practice and what she does and how she helps her clients.
Yeah, I used to work for Big Four for a long time, and then work in a lot of big companies. And at those moments, I thought that those are too very complicated, very time-consuming. So I started to look into startup business. So I really enjoy work with smaller company and a startup company to guide them through step by step and how they from nothing to form a company and to formalize the whole process of the operation. So my practice mostly currently, I work with a lot of different industries, including entertainment, real estate developers, and import-export, and some mom and pop stores. And then work with the owner closely, so know their business and know their needs to walk them through. That is the fun part of my practice. And I work with a lot of international companies as well.
That's awesome. And do you find that when you go to the smaller companies, they already have a format that they've established, or do you kind of help them from the ground up in building their own systems?
Both. Actually, both.
Okay.
And in some sense, it's easier to work with a startup company.
Right.
Because a lot of them are very lost, and from how to select a entity type, should they form a company formally, or they just do it as a sole proprietor. So the fun part is to talk to them to understand their business, understand their needs, and then finally they can pick what they want and see how they grow, and I grow with them. That is the fun part of it.
Yeah, so one of the things that we always talk about, Michelle and I, when we meet up all the time, is how we can help our clients. And it's so much easier to help them from the beginning. Where we know, we sit down with them, we talk to them about what their goals are,
Right.
what they're doing, rather than coming in later on
Right.
and having to do a restructure. And a lot of times clients don't even know. It's like you sit down with them for the first time. How many times do clients ask you in return, what do you mean by that?
Oh, geez.
Or we ask clients, what's your 5-year plan? What's your 10-year plan? You're starting a company.
Right.
What type of company do you want? And they're just like, I just want to start
Right.
business.
This is my passion, and I want to work on that, and I'd
Exactly.
like to make money on the side. You know,
Exactly. But we enjoy, I think Michelle and I are from the same philosophy that we enjoy educating our clients about how to do their business, where to start. Not necessarily their business itself, but the
Right.
whole administration side. Michelle works on all of the numbers side and I work
Right.
on the legal side. But isn't that right, Michelle? I mean, oftentimes it's just the best thing. We find so much more gratification from watching the clients start their business and growing with them.
okay.
Right. And especially sometimes a lot of our clients, smaller clients, they come to us like just ask us to form a company, and they didn't even have agreement with a lot of partners. That is the time that you don't have a lawyer. You need a lawyer to draft that. Then they will come to me and say, Michelle, can you draft one? I say, I am not a lawyer. You need someone to really to have to prepare an agreement which can be enforced. So
Right.
it's
So-
just a lot of times happen like that.
Last time we talked about partnership agreements for
Right.
businesses when you go in and you
Right.
have partners or whatnot. And I always talked about what the importance is on the legal side of it, right? But Michelle, what are the tax purposes for a partnership agreement? Doesn't that have an effect on your tax reporting?
Yes, it's really important for partnership, especially for partnership, is how the partner between the partner, how they separate how they allocate the profit, how they allocate the loss, how they contribute the capital, what is the exit plan. So those are very important when we draft the tax return or do any tax planning. And most of the time we will ask them, where's your partnership agreement? And for a lot of small business, they don't have one.
And it's already tax season, right? And you're trying to prepare a tax return with no partnership
And
agreement.
most of them are very last minute, and they don't have a good record, good book, and it's just hard. So that's why I really enjoy working with people, the company from the beginning, so can guide them through step by step. And you ask when there are companies coming in and they already have a structure, that is the time that we help them to sort it out and try to fix it and slowly.
So, Michelle, I just wanted to touch upon a lot of our listeners don't really know the tax issues when it comes to partnership, and they believe they have a partnership, and then they go and do their taxes, and then they get the stack of paper back, and they're not quite sure what they're supposed to get, right? How do you know you've got what you're supposed to get? So, very briefly, if we have an LLC, what are the members supposed to get as part of their tax return?
You mean for the LLC member or just
Yeah,
the LLC?
the LLC members, I mean, the LLC itself, someone else, whoever's in charge of the taxes will prepare that, but the members get like a separate form that they have to then take to their accountant, right? So what are they supposed to know that, I want to make sure our listeners know, it's like, hey, I'm a member in an LLC. Shouldn't I get something like a schedule of something?
Right.
So what do LLC members get?
LLC member, they will get a K1. They get a K1. LLC is, for tax purposes, is a partnership. So the LLC file partnership tax return for federal purpose, and all the partner or all the member, they should get a K1 from the LLC. So the LLC filed a tax return, and LLC itself does not pay tax. The member have to pay their share of tax. And let's say you own 10% in the LLC, and the agreement saying that the profit will be allocated based on your 10%. That's why the partnership agreement is really important. So you get the 10%, and the 10% of the income from the LLC is going to allocate to you. You are going to pay tax on that 10% of income.
So when we're talking about that, that means that you as an owner, partial owner of the company, you don't actually receive 10% of the profits, but you're going to be responsible for 10% of the taxes.
Correct. Correct.
Wow.
Just so you guys know the difference, you're getting a Schedule K or a
yeah.
K1, and you're like, wait, I didn't get any money from the company this year, but why am I paying taxes?
Right. Oh my
That's
gosh.
because LLCs are pass-throughs. So whatever income the company earns,
Right.
it passes through to you to pay taxes for.
Oh my gosh. See, that's so much. See, I was still stuck on the partnership agreement. I'm going to be honest, because I think a lot of times, and we were speaking on that, especially last week, you go into business with a friend or with a close acquaintance and you're like, this is great. And you don't want to talk about partnership agreements or the legalities behind being business partners with someone. And so this is great information because especially I'm thinking, in my head, and I think a lot of listeners are as well, if we don't make any money in this business, then we don't have to pay taxes on it, and that's not necessarily what the case is.
The business may have made money.
Right.
But you didn't take a cut of that money at the end of the year. However, because it's an LLC and it's a pass-through, you still have to, you're
Pay
still
off of
responsible
that.
for it.
Yeah.
Yes. So is there a difference between an LLC and a corporation if it's not an S-Corp? Do S-Corps have the same tax responsibilities, Michelle?
Same thing. It's very similar. So let me get back to the partnership agreement.
Okay.
When you do a business, anyone do a business with friends or family, if they have hard time to come up with a partnership agreement, I think the first thing they should think about is let's formalize this. Let's go to a lawyer. So when a lawyer come into the game, and the lawyer will guide them through, you need this and you need that. So I think that is easier for you to talk to your friends. That's my personal experience as well. So then it's easier to talk through the lawyer than you talk to your friends and how to divide the profit or loss in the partnership. So let me get back to your question on the S corporation and the LLC. So S corporation is similar to LLC. It's also passed through. So they also get a K1 as well.
Okay. Now, but with C corps, that's different, right?
Yes. C corp you don't get a K1. So because the C corporation they pay tax, the corporation pay tax. It's not a pass through. So the corporation pay tax, and after they pay the tax and they have residual money, they may declare dividend. Then they pass through the dividend. Then the shareholder have to pay tax on the dividend income. So that's why we often said that corporation is a double taxation entity.
Right. So did you understand that one?
Wow.
Daisy?
Yes.
Did that
yes. Okay. I'm going to see by trying to reteach. Okay. So if you're a C corporation, you don't have to fill out a K1 because it's not a pass-through. A pass-through is an LLC and an S corp.
Also, a officer,
Right.
and you're getting an income as a salary.
Right.
You may not have, you may not declare dividends each year. You may wait a while until you have a lot to declare, right? Otherwise, you just expense it out, right? Michelle, we can expense it out as payroll and whatever else to the officers who are also shareholders, because shareholders can be officers.
Correct. That's it. Yes.
So if you're processing the information as I am, you might be wondering, so if I'm being taxed twice, or if I'm being double taxed as a C Corp owner, then what are some of the benefits, or what are some of the tax benefits rather of having a C Corp versus an S Corp and a LLC? So Michelle, would you be able to assist me with that, please?
Yes. So for LLC and for S corporation, because they pass through, so the benefit from the tax standpoint is that they only got the income they earn only got taxed once. So the company doesn't pay tax. All the shareholders responsible for their share of income, the tax on the share of income. So only taxed once. It's more tax saving. For C corporation, from tax standpoint, they pay a little bit more tax. But then we got to look at everybody's situation. It may not be always, in the past, corporations have to pay 34%, 35%. But since 2017, the current administration lowered the tax rate to 21%. So it's significantly lower. then you pay 21% on the corporation, then the dividend paid to the shareholder. If a shareholder doesn't have a very high income, so that is not a lot of difference. But when a wealthy individual, they have higher tax rate, like 37%, that is not going to help them.
Oh, okay.
But C corporation have a one thing why so many companies choose C corporation is because it's easy for them to have a capital injection, meaning have more shareholder coming in. So it's easy for them to add more investor. If you have an LLC, then that from a tax standpoint, from a administration standpoint, you have a lot more work to do.
So as an LLC or an S corp, you don't have any shareholders. That's only a C corp.
No, S corporation also have a shareholder.
Oh.
They also have shareholder, but the shareholder that coming in is they have limitations. So the shareholder have to be U.S. people.
Okay.
Cannot be foreigner. C corporation, you can have a foreigner, you can have a U.S. person. LLC as well. LLC, you can have foreigner or U.S. person.
So for all of our listeners who's looking to get investors, one of our recommendation is C Corps are great, especially if you're looking for investors from overseas.
Right. Oh, wow.
Right? Because C Corps allow for overseas investment, foreign ownership. Your LLCs are good too, but to that extent, they become a member and they have equal rights. One of the things I always talk about. Right?
Yeah.
Where's the voting, right? And in a C Corp, we can have two different types of shares where we have investors have a particular type of share called preferred shares.
Okay.
Those guys don't vote. They just, but they're first to get dividends.
Okay.
And then you have your founders who are working the business have common shares. They have voting rights.
Are founders also allowed to be officers?
Yes.
Okay.
There's nothing against that either.
Awesome.
So, and you can be a common shareholder and still be an officer.
Okay.
You can get a payroll. You can, Michelle, corporations, and I think even LLCs can set up 401ks and different type of retirement plans for their employees, right? Especially executives.
Yes. For corporation, yes. But for LLC members, because they don't have wages, but then they can have in the agreement, they get a guarantee payment.
Okay.
So guarantee payment to the member, then which they can pay for the cost of living. And then the 401k they set up or the SEP IR they set up is based on the income, based on the wages.
So for LLC members, you'd have to set up your individual, your self-employment IRA and not one through the corporation.
I believe you can do that too. When through the corporation, you have a group plan because there's no discrimination. So certain plans, there's no discrimination. If you have an employee in an LLC, then everyone should offer the opportunities to join the plan.
Yeah. So, but C Corps, you can definitely have 401ks. Set up 401ks for yourself.
That's
don't take a
amazing.
dividend.
Yeah.
Make sure you have 401k being, retirement money set aside for you. While your investors do get a dividend every year.
That's awesome.
Right?
And that's going to be separate.
Right.
So if you decide to do a 401k instead, it would be in lieu of collecting dividends?
Not necessarily.
Okay.
Not necessarily, but one of the things is, Michelle, for corporations, if they're putting money aside in a 401k for their employees and officers, is that considered an expense that brings down their overall income?
Yes.
Okay.
That is an employee benefit. So which is deductible, which is as long as it's not it's offered to everybody because there are so many retirement plans out there, 401k, SEP IR, and a simple IR. They really need to talk to the investment bankers, see which one is suitable for your company. And then the employee, the retirement benefit pay for the employees is also deductible.
Right, so your $100,000 income suddenly is a lot less if you're putting some of that into retirement for your employees,
right,
which includes yourself, your partners, right, and definitely employees. What's a better way to keep your employees happy and loyal to the company?
Right, give them retirement
benefits. Give them benefits,
right.
All sorts of benefits. So that's something that's important, and those things are often items that you would put in a partnership agreement, a bylaw, a shareholder agreement, operating agreement. So all those agreements would address some of those things if you have it,
Right.
And you want to make sure you talk about it in advance.
Okay. Yeah.
Right,
Makes
Mitchell?
a lot of sense.
Yes, correct. Yes.
So I wanted to also touch real quickly. Last time I talked about real property purchase, and I tell everyone this, that it's better to have an LLC buy property than it is to have a corporation, except I am never good at explaining why that is the case from the tax point of view. But I know my accountant friends and all my CPA friends always say this. So I repeat what you guys say, but I never am able to fully explain it. So Michelle, please explain to us, why do we want an LLC to do real property purchase?
The LLC, one thing is easy, right? And then they have the legal protection. That is the main thing for it. So if you put into the C corporation, and the C corporation, don't forget that we have that double taxation.
Okay. So we're talking about the value of the property in terms of when the value goes up and we sell, where capital gains is a lot higher.
Correct. Yes.
Okay. Wow. All right. That makes a lot more sense. I always
that does sound
easier. There's a reason, but I don't.
Right. Because if you have a C corporation, all this income, they don't have a bracket. They just have a flat rate, 21%.
Wow.
And what's the bracket for an LLC? I mean, what are the different brackets?
For LLC is different. LLC basically that is going to pass through to the shareholder. That is going to go by the shareholder's tax rate. It could be higher, could be lower, and the shareholder could have other LLC and other investments and have a similar type of income. And like for capital, if you don't capital gain, if you sell the property, you have capital gain, and the capital gain total income does not exceed certain amount, and you probably don't even have to pay tax on that capital gain.
Okay,
or you have other property.
No taxes.
The other property also have passive loss, and because it's real estate income by default is passive. So you have other passive loss, and then you can also offset that as well. So it's more flexible, and the tax rate is lower.
Okay, so basically for an LLC, when it comes to real property, again, it just depends on like any other income for an LLC, it depends on the individual owner's tax bracket that they're in, and it's not the LLC itself. Okay.
Right.
All right, that makes sense. And then the last issue we want to talk about today, and I don't know if our friends in the industry are concerned about it or not, but the rest of the business world is quite concerned about it, and that's the 1099 versus W-2 changes.
Oh, yes, please.
So there's a bit of the labor law changes in recent years, and I think a lot of people in the industry, as well as millennials, love doing the 1099. You enjoy being 1099.
Right.
And last time we talked about, even when you are a 1099, what you want to do is have a legal entity.
Right.
So that you can have the benefits of the different expenses that a legal entity has. So Michelle, if you want to, bring us up to speed on some of the tax issues when we are talking about a independent contractor versus a W-2 employee.
Sure. For 1099, recently I have a couple of clients. Actually, I think the IRS really pay attention to the 1099 filing. And I have quite a few clients last week. They received a letter from the IRS and saying that you filed 1099, didn't have the right information. So it seems like they pay a lot more attention to the 1099 filing. So for 1099, for people who receive 1099, if you don't do anything, it's going to be a Schedule C income, meaning that it's kind of like a sole proprietorship, and you put in income and offset all the expenses. So one bad thing about it, not a bad thing. So I think it's not, I would not do that, is because the IRS really look closely into the Schedule C. Most people, when they file Schedule C, they tend to mix up the personal expenses and the business expenses.
So just in case, Michelle, you're not here and you can't see this look that Daisy has. When you said Schedule C, she's just got this, her eyes went big and she kind of had a blank look of what is a Schedule C?
Meaning that you don't you just report a form on a tax return. You're not going to separate that from your personal tax return to a business tax return. So if you don't do anything, you don't form a company to formalize all the expenditures. So let's say you don't have a company, you just received a Schedule C, have a $10,000, and you have auto expenses, all other expenses. Then some of the expenses you can deduct it as long as it's necessary and ordinary expenses for you to generate that income. But if you don't have a company, so you easily lost deduction of some of the expenses. Let's say auto expenses. When you lease a car, you use a personal name to buy your car.
Right.
So that car, the IRS can come in and challenge that.
Oh.
So and if you have a business, you form a business, you lease the car under the business, or the company buy the car under the company's name.
Can you
so
also?
That is easier.
How about when you have a vehicle? Can you also, in the sense that you bought the vehicle or you leased the vehicle under your name, but you get the company to pay for the lease, as in a reimbursement or a direct payment from the company to the leasing company, even though it's under your name? Can you do that?
You can do that, but they challenge you. They challenge you, and a lot of times you won't retain the deduction.
Okay, so it's better to have the company lease it for you.
Yes.
So an
yes,
example
put
of
the
that.
company's name on the document. So the car dealership normally won't let you do that. They still want you to personally guarantee that, but they can put the company on the title.
So would an example of that kind of be like Mary Kay? You know, companies like that where you get a car when you meet a certain, requirement or whatever within your company, but those are Mary Kay labeled, branded cars. So would the company be at that point purchasing the cars?
Those cars are purchased by Mary Kay.
Oh,
that's the difference,
okay.
right? So at what point should we not be on a 1099 anymore?
It really depends on every individual. So every individual should talk to the accountant and tax advisor and do a projection.
Mm-hmm.
If it's to a certain point, like some people, it's okay. I pay self-employment tax $20,000 a year. I'm okay with that. But some people don't like it. Some people really think that I don't want to pay that much. All I need is like $5,000, $6,000 a year. Then in order for me to get the benefit for Social Security, why do I pay that much? So some people don't like that idea.
Oh, so age plays a big part in this too. Like for those of us, those of our listeners who are at a certain age where they're ready to retire, but at the right age to retire, but still want to do things after retirement. Right. The question is, do they form their own company to do the work, or do they just do the work freelance and get a 1099? Right. How does it affect their pension and everything else that they're receiving? That's especially. I think in our industry, we are getting more and more with the cannabis industry. We may be getting a little more of the senior citizens wanting to do something after retirement. So that's something that we really want to think about too. So now that's the 1099 point of view. But with a W-2, basically what we're saying is that anyone who's receiving 1099, they can turn that into a W-2 by having their own legal entity, right?
Wait, say that again. When they get a W-2, then they cannot have that W-2 income put into their legal entity.
Right. No,
so basically,
I get that. So I'm saying that with those people who were getting 1099s, they can choose to set up a legal entity and actually have the 1099s be issued to the company, and the company pay them a payroll and issue them a W-2 instead, right?
Correct, yes. If they choose to have S corporation, then they can issue themselves a W-2. If they have LLC doesn't pay their LLC member for salary. So anything the LLC makes is considered the salary for the member.
But the expense side, the expenditures and the recording of the expenditures seems to be a little easier and more clear if you're recording expenses through an LLC or an S corp versus as a 1099. Yeah. Okay.
Yes. In that case, because when you form a company, you formalize everything. You will separate the bank account. You will have a bank account for the business. So any cash in and out income or expenses in and out of the account will go through a business account. We totally separate from your individual.
Okay.
And so it makes your
account.
tax reporting a lot easier.
Yes, it does.
Right.
Right.
Makes the record keeping much cleaner, and the service, the IRS, like that.
Ooh.
So if you have a business mixed up with your personal account,
Right.
when come to the audit, when the service come in, it will ask for bank statement, credit card statement, whatever you spend, whatever income you have from your personal account, they will see everything. They don't like it, and you don't like it. So that's why it's easier to form a company and just separate your business and personal.
Right, get a separate credit card for the company.
Right.
Do business
Correct, yes.
expenses out of the credit card.
Right.
And then have the company pay for those expenses.
Rather than you mixing it with your personal business, and then
Right.
the IRS is like, what happened here? Okay.
Now, when we're talking about that, there's a legal point that I need to point out.
Okay.
If you are when you are a 1099 and you're doing things separately, then doing it as there's no legal issue there. But when you set up a legal entity,
Right.
and the law provides protection to the owners of a business, right?
Okay.
You are supposed to be, if you set up the entity properly and you do everything right, you as an individual owner may not necessarily be liable for the company's debts.
Okay.
And or whatever else, the liabilities of the company, right? And you have and you buy insurance and all that for the
Right.
company. So one of the things that you really need to be careful about in terms of your expenditures at this point, when I say about getting a company credit card,
Right.
spending company expenses on that and paying from the company, is there's something called commingling. And when
Okay.
you mix personal expense, personal income with company, it
called
breaks down.
commingling.
Yes, it's called commingling, and it breaks down the barrier, the legal barriers that's set up to separate the liability
Got
of
you.
the individual from the business.
Okay.
So I tell my clients, if they have assets, like if they have a home or something like
Right.
that, it's best to set up a legal entity to do their business, so
Okay.
that their personal asset isn't going to be tied into whatever debts they create or whatever
Okay.
trouble they get into with their business. But there are a number of things that you have to do when you have a legal entity. You have to follow formalities. You have to do annual filings. You have to be very careful with your finances and separate those very well and clear.
Yeah, so we're about to actually wrap up here, but I just wanted to say thank you so much, Michelle. There was so much valuable content and information that you gave us today. I know I got a lot of my personal questions answered, so thank you. But
Thank you.
we really appreciate you being on the show with us today. Is there any piece of last minute advice that you'd like to give our listeners?
Just keep all the record. Keep a clean record. That is really important. Doesn't matter. You're going to have a CPA or accountant to help you. And I think the bottom line is to keep a good record, and the time that anybody want to come in and review the financial or the tax return, and that is going to be very helpful.
So I hope our listeners figured out after hearing Michelle talk today that it's really important to have a accountant CPA on your team to advise you along the way, every year. So don't just see your CPA at the end of the year when you have to do taxes, because they're very useful during the year when you're making some of these decisions. I want to buy a property. I want to set up 401k. What can I do? How much money do we have? Should we forecast? What can we do next year? So you need to do that, because I myself see my CPA during tax season, and then once again mid-year, just to see what's going on next year, and where can we spend more if we expect more money coming in. So it's really important to have these people as advisors. They're consultants. They're not just tax preparers. People, please have yourself a good CPA.
Exactly.
Thank you so much, guys. So this has been some amazing time that we've shared together. Thank you so much, Michelle. And
you're welcome.
We hope you have a lovely day.
Thank you, everyone.
You too. Thank you.
Thank you, Michelle.
Okay. And so, guys, we learned a really great value today. I think I was under the assumption, I had a few, ideals that I had kind of debunked, right? I didn't understand the process of a partnership and maybe you both going to meet and sit down with an attorney and having conversations about what you'd like your employee benefits to look like, or what type of corporation you'd like to have, and things of that nature. And so I think a really valuable and important lesson was definitely that, you know, you should be sitting down, even how awkward it may feel, because I know as a millennial, it gets difficult to have those kind of conversations about money and finance and things like that. But it's probably the best protection that we're making for ourselves at the time.
It definitely is. And here's the thing. It's not going to be something that you're going to be able to, you know, decide on, resolve in the first meeting or whatnot. Because as you do your business, as you grow, you're going to make changes.
Right.
And you don't, I mean, I always admit this. I don't know what I don't know, and if I don't talk to people, I won't know.
right, absolutely.
Right. So there's no shame in going to someone who's deemed an expert or a professional in the field to say, I don't know what I'm supposed to do here. I have an idea. You tell me. Where do we go from here? And it's amazing how much more you will learn just asking those questions. And and I think these conversations are really important. And just understand that it's not something that you're going to have all at once. No one has all the answers. And especially not when you first start. You could do all the research you want, but there's going to be so many different topics when it comes to setting up your business, So that you're not going to know where we go with all of that. And we didn't get to touch upon some of the issues from the show on the expenditures, but for import-export businesses and even manufacturing, especially in the cannabis industry, some of the things that you can write off in terms of expenses is something called, cost of goods sold.
Oh, okay.
So, what did it cost you to make these things, right? So there's so many things, and every industry is a little different, and the tax requirements for each is different. And don't forget, because the cannabis industry is not yet recognized by the federal government, the IRS codes have not caught up to date as to what the industry can do. So the CPAs that are working in this industry, they're working out of the box. They're thinking out of the box as to what they can do with your business from a traditional point of view, and what they can, how they file these things. So I do not believe that any tax preparer can really walk you through the process. You really need to know someone who, go to someone who has a lot of experience in just in every different type of industry. And in that way, someone who is going to be able to kind of cross-reference things and figure out how to do it for you, because, IRS hasn't decided that this industry is yet listed in the Internal Revenues Code.
Right. And I think that's kind of a good thing that you have mentioned as well, is just going out to go get information. We were speaking about it we were speaking on this at the beginning of the hour, but we were more so saying that how important it is and how valuable it is that you do have these meetings, and then you do have people like that, like Cindy was saying, that you meet with multiple times a year, not just when tax time comes around, or not just when you're like, oh crap, like what am I going to get back? Like, not just refund time, but you need to actually be aware and knowing what next year will look like for you, because you never know what's going to happen or what your retirement is going to look like, and kind of getting more niche down, or you need to know more about your finances and what you should be expecting.
Right. So like, as I mentioned before, the attorney is kind of like a doctor, someone that you go to get a regular checkup on the health of your business, where we are, what we're doing, what type of expansions, or do we have to scale back, what type of issues we're facing recently. And you never know, when you go and talk to your attorney may bring you up to date on some of the lawsuits they've been seeing, and then now we have to adjust how we're doing work, Because I would get, if a client, those who are already retained clients of mine, if I see a number of lawsuits showing up, or legal reports about various things like ADA complaints coming around, and we get wind of certain individuals going around to the different businesses and then filing complaints. I call my restaurant clients. I'm like, are your restrooms all ADA compliant? Because
here's what I'm seeing.
Here's what I'm seeing. We want to make sure make sure you're training your staff for these things or whatnot. So you kind of need to have regular conversations with these individuals, and an accountant's the same thing, right? Because because you're talking not only about last year's income and expenses, you also want to talk about this year as you're going into this year, and then projecting for next year and planning for it. And that way you can make those changes mid-year if you need to and whatnot. And then another person that I always say is important too is your insurance broker. Ooh. And you think about insurance brokers, you're like, oh, I buy the policy and you just renew it every year. So what's the big deal? But you know what? If you're in business, you have workers' comp insurance, and workers' comp insurance renews every year, but it's based on your payroll. So if you talk to your broker every year, they're going to look at what's your payroll this year like, and should we be changing the policy to a different company who's, or should we upping it, or however. Same thing with other type of insurances that you have. I mean, there are all sorts of insurance policies out there. There's something called errors and omissions for those of us who are professionals. Doctors, lawyers, accountants all have that. Corporations have, and other type of legal entities have something called directors and officers.
Oh, wow.
Oh, yeah. Insurance to cover your officers and directors and this, whatever they did wrong.
Oh, gee.
But, you may not want to buy that early on, but then as you're starting to really, do more business and your directors and officers are out there, and maybe you want to talk about more added
in
insurance.
case there's a,
Exactly. So you want your broker to be, you want to see your broker mid-year as well, and have them take a look at all of your policies and see what they want to do for next year. Do we need to add policies, remove policies because we don't need anymore? Especially with COVID right now, where like most of us aren't even going into the office.
So why are we paying for a certain type of insurance?
My premise liability insurance. It's like no one's coming into the office. Why do I need? I'm like, I'm the only one who's going in. No one's gonna trip and fall in my office. Can I lower this?
No,
or can I do without it altogether?
Exactly. And that makes sense. And then also more for like, since you were saying professionals, I worked in the healthcare industry. So like doctors right now, a lot of things are happening via telemedicine. So is there an insurance policy protocol and service for that?
There are media insurance. So for those of us who have a lot of media exposure and have and do things on the internet and everything, advertise, promote, and all that, we may want to look at that. There are insurance for technology where you're protecting, where you're insuring yourself from making a mistake and unwittingly disclosing client information over the email.
Oh my gosh! Right,
or for whatever reason you got hacked and your entire database gone. There's insurance for that. Now, of course, the question is, do you need to? I mean, what are you keeping in your server? What information are you keeping? How are you encrypting it? That do we feel comfortable with not having that policy or not? But you don't know unless you talk to your broker and he or she looks at what you're doing. So the reason why I talk about the insurance broker is our next segment is going to have an expert from the insurance field.
Very exciting.
So we're going to look forward to that as well.
Yes. So thank you so very much again for tuning in. Thank you, Cindy. It is always valuable. I'm so excited. I'm so excited.
I'm waiting to see you set up your business and really see all this go through.
I know every time I'm in the studio with Cindy, I'm always like taking notes, and so there'll be a moment where I'm literally like in my notebook, like, okay, if that means that, and then Cindy usually answers it, and I'm like, oh my gosh, okay, so
this is what I'm going to do next.
It's amazing. So Cindy, is there any last minute information you'd like to give us about different corporations and making sure our business entities and our tax preps are going accordingly?
Well, it's mid-year. We're going into we are in quarter three, actually wrapping up quarter three almost. So this is a great time for everyone to really look back in this past year and look at what you're doing. And because it's been a crazy year, projecting the future is a lot harder because we have no idea what's going on. So this is a good time to just reevaluate some of the business practices, especially for those of us who are able to go back into business and reopening their shops and doing things. This is a good time to, look at some of those contracts, and if you're continuing on some of the different type of business that you're doing, think about revamping some of it at this point, because business is going to change. Life is going to change, given what's going on. So we do have to make some adjustments. And a lot of people right now are also talking to their landlords and talking about those deferred rent payments they haven't been paying. So that's another thing. And you definitely want, if you are talking to your landlord about that, you want to have it in writing that says you have so much time to pay, and come up with a payment plan of some sort so that you can talk to you. It's better to talk to your landlord and work it out than to assume they're not going to do anything.
And they're understandable because of what's going on.
Right, because just remember, the landlords, they have bills to pay too.
Right, exactly.
Right, and so everyone's in the same situation. So let's just work things out. And if you're going to work something out, make sure you get it in writing.
Absolutely, absolutely. Well, thank you so very much again, you guys, for listening and tuning in. This is a very exciting topic. And so this has been the CNT Business Law Hour on Hayes Radio.
Thank you, everyone.
You're listening to Hayes Radio Network, Cannabis Lifestyle Radio.